voiceover generated using licensed AI narration to keep the EA Overview series consistent. Welcome back to the Portfolio Lab. This is the first video in the individual EA Overview series. In the last video, I talked about why this portfolio is built around multiple EAs rather than one single strategy. In this video, I want to start looking at the individual systems, beginning with one of the level-based breakout components in the portfolio. I refer to this system as the high-low day break EA. I'm going to keep this deliberately high level. I won't be sharing source code, exact settings, exact entry rules, trade management rules, or anything that would allow the system to be copied. The purpose of this channel is not to give away strategies or provide trade signals. The aim is to explain the role of each EA within the wider portfolio and how I think about risk, behavior, and live monitoring. At portfolio level, this EA gives me exposure to previous day level behavior. That means it is looking at how price behaves around clear daily reference points, rather than using a purely discretionary view of the chart. The basic idea is simple enough to explain without giving away the system. Each trading day creates a high and a low. Those levels can become useful reference points for the following session. Sometimes price reacts around them. Sometimes price breaks through them and continues. Sometimes price breaks through and fails. This EA is designed to take part in that type of behavior in a structured, rules-based way. It is not trying to predict the market in advance. It is not trying to guess where price will go at the start of the day. It is designed to respond only when the market gives it the type of situation it is built for. That distinction is important. A lot of poor trading comes from prediction, hope, or reacting emotionally to what price is doing. With an EA, the point is different. The rules are already defined before the trade appears. The EA is not deciding in the moment based on a feeling. It is simply waiting to see whether the market presents the kind of conditions it has been designed to handle. Previous day highs and lows are useful because they are objective. They are not vague. They are not based on how I feel about the chart. Every day has a high and a low, and those levels can be marked consistently. That makes them suitable for a systematic approach. But they are not magic levels. I think that is important to say clearly. Price breaking or reacting around a previous day level does not guarantee anything. Some moves follow through. Some fail almost immediately. Sometimes the market is clean and directional. Sometimes it is messy, slow, or completely unsuitable for this type of behavior. So I do not think of this as a system that is right, because it uses previous day levels. I think of it as a system with a defined job, to provide exposure to a particular type of daily level market behavior. At a very general level, the EA identifies the relevant daily reference levels, waits for the right conditions around those levels, and then manages any trade according to its predefined rules. That is as far as I want to go in terms of mechanics. I am not going to go into the exact trigger, timing, filters, stops, targets, or management logic, because that is the actual system. For the purpose of this channel, the important point is the role it plays in the portfolio, not the exact recipe behind it. The market conditions matter a lot. This type of EA can perform better when the market is moving cleanly. If price behaves clearly around a daily level and there is enough momentum or follow-through, the system has a better chance of doing what it is designed to do. It can also suit days where the market has enough movement. Level-based breakout behavior needs the market to actually move. If price is flat, hesitant, or just drifting around the level, the setup is much less useful. Where this kind of system can struggle is in choppy conditions. False breaks are a normal problem. Price can move through a level, appear to be breaking out, and then snap back. That is part of the risk with this style of strategy. It can also struggle when volatility is too low, because there may not be enough movement after the setup appears. And it can struggle around sudden news-driven moves, where price may spike through a level and then reverse quickly. So this is not a system that should be judged trade by trade. A single winning trade does not prove anything. A single losing trade does not mean the system is broken. The better question is whether, over a larger sample, the system behaves in a way that makes sense and adds something useful to the portfolio. That is how I think about the backtest as well. The uploaded backtest for this EA is encouraging, but I do not want to present the numbers as a sales point. I am more interested in what the backtest tells me about the character of the system. For example, it gives me a sense of how often it trades, what sort of holding time it tends to have, how it behaves in drawdown, and whether the idea is worth monitoring live. In this case, the trade sample is large enough to be useful, and the holding behavior is relatively short-term compared with some of the other portfolio components. In the uploaded test, the average holding time is a little over 2 hours, with the longest positions around 6 hours. That matters because it tells me something about the role of this EA. It is not one of the longer hold systems. It is not primarily there to capture multi-day moves or weekend exposure. It gives the portfolio a more intraday, level-driven component. That does not make it safer by default. Shorter holding time does not remove risk. It just creates a different type of risk. Shorter-term strategies can still go through losing periods. They can still be affected by false breaks, spread, execution, slippage, low volatility, and poor market conditions. So the key question is not whether the EA avoids losses. It doesn't. The key question is whether the losses remain controlled, whether the strategy still behaves recognizably, and whether it continues to add a useful source of behavior to the wider portfolio. This is why I am careful with backtests. A backtest is useful context. It can show whether an idea has worked historically. It can show whether the rules are coherent enough to justify live monitoring. It can give me information about trade frequency, drawdown, holding behavior, and general performance shape. But it is not proof. The real test is live behavior over time. That is why this portfolio is being monitored through Darwin X0. I want to see whether the systems continue to behave in a verified live environment, and whether the portfolio as a whole remains coherent. At portfolio level, this EA has a specific job. It is there to give exposure to previous day level behavior. It is not trying to do the same thing as every other system. It is not a pullback system. It is not a reversal system. It is not one of the longer hold pattern systems. Its role is narrower and more specific. That is useful because I do not want all the EAs in the portfolio to depend on the same idea. If every EA was just a slightly different version of the same strategy, the portfolio would not really be diversified. It would just be the same risk repeated several times. So what I want from this EA is not perfection. I want a recognizable contribution that is different from the other components. When I monitor it live, there are a few things I care about. First, is the EA still behaving broadly as expected? Second, are the losing periods within a normal range for the system? Third, is the live trade behavior similar to the type of behavior seen in testing? Fourth, is it contributing something different from the rest of the portfolio? And fifth, is it becoming too correlated with any of the other systems? Those questions matter more than the outcome of one individual trade. This is also where discipline comes in. With automated trading, there is always a temptation to interfere. If a trade loses, it is tempting to think something is wrong. If a trade wins, it is tempting to think the system is better than it really is. Neither reaction is helpful. The point is to judge the system over time, within the context of the wider portfolio. So, to summarize, this EA is a previous day level component. It is designed to respond to a specific type of market behavior around daily reference points. It has a defined role in the portfolio, and its main value is that it gives exposure to a different type of setup from some of the other systems. The backtest is encouraging, but I am not treating it as proof. I am using it to understand the system's character and to decide what needs to be monitored live. For me, that is the key point. This is not about finding one perfect EA. It is about building a portfolio where each system has a defined role, a defined risk profile, and a reason for being included. In the next video, I'll look at another EA in the portfolio and go through the same process. What it is designed to capture, when it may perform better, when it may struggle, and why it belongs in the wider portfolio.